Okay, guys, we're going to do Chapter 16, Financial Statements and Closing Entries. So let's click on that. We're going to do an income statement, a statement of stockholders' equity, a balance sheet, and then the closing entries. And then finally, the post-closing trial balance. A little difficult, but we will definitely make our way through, so just be patient. Okay, let's start with the income statement. So let's go to 16.1. I'm going to have to do multiple videos because they will be kind of long. There's a lot of stuff going on. So I'll try to do like each section as I can. So 16.1 work together. First thing we're going to do is we're going to decide what accounts are going to be on the income statement. Assets, liabilities, owner's equity, they're on the balance sheet. Your revenue and your expenses are going to be on your income statement. So let's get rid of these, so not on the income statement. So these are your assets. The merchandise inventory, that is on the income statement because that's part of the cost of merchandise sold. So that's the only asset that is on there, technically. All these assets, then we have our liabilities, they are not on there. And then we have our dividends and our capital stock, retained earnings, income summary there, that's not there. Okay, sales. Your sales, these are, if you go back up, these columns are different by operating revenue, cost of merchandise sold, and then operating expenses. Okay, so your sales is operating revenue. Purchases, purchase discounts, and your returns and allowances, they are your cost of merchandise sold. All of these, your advertising all the way down, all of these, down to utilities, they are part of the operating expenses because you need them to actually operate your business. So let's check those guys off. We did do an income statement before back in Chapter 8, but it was very elementary. This is going to be way more complex. And then these last two on federal income tax and your interest income, they are on there, but they are unrelated. But they are on there, so let's just check those guys off. So your federal income tax expense and your interest income, they are outside of the normal business. So let's go ahead and grade that step. Hopefully I clicked them all. I didn't skip any. Okay, we're all good there. So let's go to the next step. Okay, in this step, we're going to calculate, we're not going to calculate, we're going to, some of them we're going to give, the formulas is what I'm saying. We're going to give the formulas for different things. All right, so this one, it says calculations required to determine gross profit are as follows. Determine the order. So you first need sales, then you have your net purchases, then you have your cost of merchandise sold, and then you have your gross profit. Okay, so you sell stuff, you get the money, then you buy stuff. You have your cost of merchandise sold. The cost of merchandise sold is what did it cost you to sell that merchandise, and then your gross profit. Okay, the next one is the cost of merchandise sold. So you have a beginning inventory. Then you buy stuff. Net purchases means that some stuff was returned to you. That gives you the total cost. Where is that? Total cost of inventory available for sale. So that's everything that you have available for sale minus your ending inventory. Okay, so you had a beginning inventory. You bought more stuff. Then that tells you what you have available, the total amount that you have available. Then you take out your ending inventory, and that's what you actually sold. Okay. The next one is gross profit. So your gross profit is going to be what did you sell, so your net sales, minus what it cost you to sell that stuff. Okay, so what did you sell and how much did it cost you to sell that stuff? Your net purchases are your purchases minus any returns and allowances. This one, it purchase discounts. And then your returns and allowances. There we go. Okay, and then your net sales is basically the same thing. So you have your sales discount, and then your sales returns and allowances. Okay, so these are things you start at the beginning. Did you give anybody a discount? Did you give them an allowance because they returned something? Okay, let's grade that step. Okay, So you might have to refer back to this a little bit, but this is the breakdown of your income statement. It's going to have different sections, and these are how we calculate those sections. All right, let me go to the next step. And you can see here is the top portion of your income statement. So I'm going to save this, and I will start in the second video because this one will be a little bit long.